We are live.
I'm tucking them up.
Tammy,
Stabbing me.
Tammy, I do this all the time, so I'm just going to do it to you as well. Tammy DiTomaso, correct?
Doesn't matter. It's my husband's last name. It's okay.
Oh, okay.
No, we're kidding.
But how do I say it?
DiTomaso.
DiTomaso.
Yep.
Okay.
DiTomaso.
And Nicholas Alexander Karadza, my younger brother, is next to you. So Tammy, thanks for doing this. I think we scheduled this maybe like 2 years ago, and we're finally doing it.
Yes.
We've had a
Took a while.
we've had a few hiccups, so we'll just kind of start into things with interest rates, because there was a big interest. I'm going to ask you how you got started into real estate and the whole bit, but the interest rate announcement as we're recording this today. So depending on when you're listening to this, the interest rates just went up in Canada, another 0.75 of a point. And Nick, I didn't see the language, but apparently the Bank of Canada was, pretty firm that we're going to raise them more.
Yeah, I forget the exact language. I think is what I sent to you. I forget, but basically they're saying like looks like they're going to raise it more, because even though the inflation's coming down, they don't really think it is, because some other numbers, oil's bringing it down, but some other numbers means it's going up, which is good luck.
So Tammy, when you see this, what are you thinking? Are you going to stay like on any mortgages stuff? And you don't have to talk about your personal stuff, but just in general, fixed, variable, or just mass confusion on what to do? Where are you at when you hear this?
So I just went through this. I just had one, and that was obviously just before this raise. And when I was looking at my numbers, I think what worked for me, everyone's a little bit different. And I know, we hear a lot about sticking to the variables and so on, but I ended up doing mine for a 1 year fixed.
1 year fixed, because you're banking on that in 1 year things might be at a better position.
I feel, yeah. I mean, obviously we don't know, but I feel like it might be either similar. So then I'll just decide again. I'll be in the same boat, I figure. Or I'm hoping it might be a little bit better.
What is the 1 year fixed? I'm not exactly what it is at. I guess what was it at that time?
What I ended up, mine were really bad actually. I shouldn't say they're really bad. I'm with a B lender on mine.
Okay, so that'll make them higher, right?
Yeah, and it made it a lot higher. And we did have plans to going to an A lender, so we're actually going to do that next time. But I think the original rate that they gave me was 7.14 for
a 1 year. That's with a B lender.
Yeah. And then I used Dan Patton with Butler, and he got me a little lower. So.
And then for anyone listening who's maybe not familiar on why you would go to a B lender, could you share just generally?
What? For me personally is like, so my husband and I, we are both self-employed. And then when I became a realtor years ago, again, self-employed, you needed a couple years behind you. When we ended up purchasing our properties, and I was talking with Dan, he had said, based on where you're at with your income, it'll make sense later to go to an A lender. But when I came around, two things. One, I forgot my renewal was coming and we had to work really fast. So a little bit my fault. And two, I ended up deducting more than I guess I should have, which brought me down past where I needed to be. So he just said it was better at this point to leave it into the B. And so that's only my own personal reason of why. And it's not that, we couldn't do the A's. It was more that we were self-employed at the time that, that was the best way for us.
Yeah, it's a bit of a shell game, right? Because like you said, if you claim expenses, it's so messy like that when you're self-employed versus just a typical T4 income for the banks. They always look at you as I don't want to say the enemy, but that's how you feel sometimes.
Yeah, and it's funny because, I look at, my job as a realtor, and I remember, I've got to talk to everybody like everybody's new. And as much as I work in this field and I know the interest rates and I know the stuff, I'll say to, our mortgage workers, you still need to talk to me like an idiot. I still need you to tell me what exactly does my income need to be at, where can I, because there's some things that can move around a bit, right? Or won't remove as many expenses as maybe I could.
Sure, but you just want to show a higher income.
I'll show it. Yeah, exactly. So.
I don't even know. How did you get started in the world of real estate investing in properties? What is like that origin story for you?
So we blame James Meggs for that.
Okay.
We'll just blame him for as much.
I think I actually knew that part. Yeah. So it was your friendship with James.
Yeah. So James is a good friend of mine. We work together, and we've been friends since 1998.
Oh, wow.
I know.
So like, what is that, university days or something?
Oh gosh. So we were maybe about 20-ish. Yeah. 20 years old or so. Yeah. University. And so we've been friends for a long time. And I had done aesthetics previously, and I had done that for about 15 years. I did that from home. I loved it. And I loved being with people, new clients, chit-chatting. Yeah, it's easy, with everyone. And then James was over with his wife for dinner, and I said, I'd like to get into real estate. And he was, you got to do it. I think you'll be great. And my family's very supportive. My husband's fantastic. But when I heard it from James, I thought it just meant a little bit more because he was in it, right?
Well, and he went through a similar thing because he was working the corporate job for a while and took a sabbatical to test out the waters, if I remember correctly, right? So it kind of
for him more risky because he really, I had him.
Yeah. That's true. But it's because he went through down it that path recently. It probably made more sense or just hit home more, right?
So what year is this when he has this conversation?
So this was 2015.
Okay.
2015, and then he had said to me, my kids were small, and he had said to me, I need to hire an assistant. So do you want to come? You can be my assistant, so you can work on that back end for me while you're taking the course.
Oh my gosh, I forgot all this.
Yeah. And I thought, oh, perfect. That's great because my kids were going to be starting school. So I went online to look at the real estate course, and I noticed that they were going to be changing the system in 2 weeks. And they were going to change it. So right now at that time, you could take 3 tests and get licensed and then take your other 3 exams, right? And then it was going to change in 2 weeks. It was going to change to you have to take 5 exams, then you get licensed, then you have to take your 1 more. Shit, I better hurry up. So I signed up right away, but I didn't want to take the class right away because my kids were home and small and they were going to school the following year. They were going to be gone full time, so I waited. So sometimes I think, oh my God, all that time I wasted. I waited, but at the same time, I appreciate it so much because I was with my kids, right? Longer. I got the full day. So anyway, once they went to school, I went in deep. Obviously, was running out of time, so I had to hurry up and get those exams in and got licensed. So I was actually licensed in 2017.
And then did you buy a rental property with James then?
Yeah. So we had bought a property together and that was our first property.
Where was that? Tell me a little bit about that.
That was Hamilton Mountain. So actually it was interesting because it was an off-market deal, came to us, and right away we always go to our clients and our buyers. What's anyone interested? We went to contractors. People passed on it. So I said to James, I'm like, well, can we get it? Can we do it? He's like, how much money do you have? Right. So we put everything in, we went ahead and we bought it and we paid, I think $280.
For what kind of
keep the price to yourself.
I know, right? And it's funny because at the time everyone thought, no, it's going to take me $40,000 to at least put some money and renovate it, and then it just didn't work out number wise to everybody. But I ended up just getting whoever I could to do the certain job. So even like I paid my parents to paint the house. I'm like, oh, they can use the extra cash. Costs us less than half the price if we hired someone else. So, and they did a really this is my daughter's home. I'm going to have to make everything perfect. Oh, I saw this. I fixed that. I'm like, okay, great. So it ended up $17,000 it cost us. And we did everything brand new.
And what kind of home was it?
So this is a single family home, downtown Hamilton.
And you rented it out as just a straight rental?
Straight rental.
Okay.
Yep. And actually it's interesting because we closed on that property, I think it was May 7th or 8th. And we had our tenant move in June 1st, first tenant.
Oh, wow.
We didn't even have mortgage payment come out yet.
Cool.
And we already had a tenant in there.
And is it the same tenant or has that?
It is. And
what were you renting it out back then for?
Ooh, I think it was 17.
Okay. And if it's the same tenant, it's gone up only marginally, I guess?
Yeah, exactly. Well, she had said that she was going to want to buy her own property. So that worked out well. We thought, okay, then she's not going to stay forever. So that's.
Do you guys do the minimum rent increases on properties or no? So like if, I don't know what the Ontario standard is, it'll go anywhere from 0.8 to like, I think 2.1, I think is the highest I've ever seen it, or something, 2.6 maybe.
Right. Normally, yes.
Okay.
For her, we hadn't because we actually did know who she was as well kind of before. So that's how we got her in so quickly, and we knew she was going to be a great tenant. But typically, yeah, we do.
Yeah, got it. And if you had to guess, what is that property worth right now? I know the market's changed in the last few months, and it's kind of like throwing darts a little bit.
Yeah.
But if you had to guess, what would it be?
27 at least.
Minimum. Oh, rent.
A rent.
So
yeah.
if you have to re-rent, no, that's interesting as well. So if you have to re-rent it out, it'd be $2,700.
I think at
Holy
least,
smokes,
yeah.
$1,000.
Yeah, and that's from 2018.
We bought that one in 2018.
18.
Oh, 2018.
They bought it for 4 years.
Okay,
yeah.
It's gone up $1,000 a month.
Rents have really moved, and that's what I think a lot of people don't realize. Like, look, I know interest rates have gone up and stuff like that, but when they're doing new calculations, which still because interest rates have gone up so fast, rents haven't kept up in the last 6 months. But over the last few years, they've moved quite a bit, right?
And then if you bought that for $280, you said?
Yep.
And then what if you had to guess today? What would it be worth if you had it? I know that's difficult today.
It is.
But give me a ballpark, just roughly.
600.
$600.
But you know what? It could be a little less. just because of where the market's moving. And it certainly was a little higher before, of course, but I would probably say on average, maybe around.
Well, after today's rate increase,
550
it might be
to
worth $1. You
Yeah.
never know. Who knows what it's worth?
We'll just hold it and wait.
So it's
then
worth
and-
it. Yeah, just hold it. Yeah, just keep collecting the rent
Yeah.
and move on.
I have to say too, sorry, is that she was fantastic though, because they ended up coming in and they redid our whole back deck, her and her boyfriend. They messaged us like, I hope you don't mind. We planted a whole bunch of hostas in the front. We're like, oh, we encourage it. This
Yeah.
is
Yeah,
fantastic.
no kidding.
It's
Anything
great.
else you want to do?
Yeah, yeah.
The
And then-
basement could be redone if you
Yeah.
want to, whatever you need.
And then why Hamilton? Are you from Hamilton?
Yeah. I'm
So
from-
you knew Hamilton, so
Yeah.
that was easy choice.
Yeah, I'm open to obviously surrounding cities around me as far as, being close. I do like that, but both the properties that I own are in Hamilton.
Okay, got it.
Both
And-
rentals, I should say.
And do you still, when you're helping clients buy properties as rentals, Hamilton still first choice, or are you going all around?
So it depends. I mean, if somebody comes to me and they say, I'm pre-approved up to $1 million and I have enough capital for my down payment and do, let's say, a full conversion on a duplex and so on, my first go-to will be Hamilton, only because that's the city that has the most growth. I see it in appreciation with the property, the price of the houses, the rents that go up. Plus, it's a larger pool, more a larger population, so more tenants to choose from. So that's usually my first would be go-to, and not just because it's close for me in driving, but honestly, it's because of the other reasons that I had just mentioned. But I would say, Brantford's another area that I'm really looking into quite a bit, and I have quite a few clients out there, and then out into Niagara Welland area is also. So it really depends on the client when they come back to me. If they say I'm pre-approved for $500,000 and this is what I have for capital, then I know exactly what city and what area and what kind of property they'll be looking for.
And are people you work with surprised when you say, Niagara Welland, or are they okay with it? Like, are investors that you work with just looking at the numbers and they don't mind going to Niagara Welland?
Right. It's funny that you asked that, because I would say a few years ago, yes, people were a little bit,
Hesitant.
or surprised, like you're saying, oh, okay, so it's doing good. Because I had a client say, well, actually, it wasn't very nice, but she didn't think very highly of Welland,
Yeah,
basically.
Got it.
And
I
she's
grew
like,
up in Mississauga. Do you know what we used to say about
she
Hamilton? When we grew up in Mississauga, you know what Hamilton was like a running joke.
Oh, yeah.
And we've, since Nick and I have been in Hamilton in some capacity, I guess it's been like 22 years or something like 20 years. We've always told people Hamilton's like the gift that keeps giving.
Yeah.
Like, what are you talking about?
Yeah.
But when you grow up and you have these like stereotypes,
Oh, yeah.
and that's just was in your mind, like, hey, the factories, and because all we would see is that when we went to Niagara, you would see the steel factories, you'd see the smoke. Like, we would never venture in.
Well, you still see it. It looks like I don't even know the mountain in Lord of the Rings.
Yeah,
Helm's Deep or whatever it's called, with the volcano
But I
and
had
the
no-
eye over it. When you go over and you just see that, and that's all you know.
Yeah.
That's
Yeah,
if you're
'cause
basing, but that's like if you're basing all of Toronto by going through, I don't know, pick whatever industrial area you want to go through.
Sure.
Like, oh, here's the whole city, right?
Yeah. And I had never been on the Hamilton Mountain until like the 2000s. Like,
Right.
even though growing up here, I just, or if I had for maybe one soccer game once, like it was
Yep.
brief. I don't remember. I was younger.
But this client you said she grew up in Welland.
She said
That's
grew
why
up in Welland.
she grew
Oh.
up there and she didn't like
Oh.
it.
Yeah.
She's shocked.
Yeah.
Oh,
Yeah.
wow.
Called them cockroaches.
No way. You know how much stuff we do in Welland and Niagara?
Oh, they love it. Yeah, they were completely open to investing there now.
yeah. Now
absolutely.
it's funny how the
But
narrative turns of an area.
Yeah, and so that's why now speaking to people, everyone's open to it. But then, I also I don't just say the word, a Welland and Niagara and leave it at that. I'll tell them all the growth that we're seeing, and I'll tell them what we're seeing in rents and prices.
Highway
and,
development, hospitals,
and I'll-
everything.
And exactly, and I'll tell them the areas that are not so great always, and every area has that. Every city.
It's funny, JP on our team, who lives in
Mhm.
St. Catharines,
Mhm.
or he just moved, but he's just outside, but he was in St. Catharines. And for years, he was always coming to Hamilton, working with investors. And then it kind of changed a little bit, and he was working with investors in St. Catharines, like you're saying.
Right.
And he didn't really, it's not like he held it, like he didn't really keep it top secret, but there was I feel like a 6 month to year period where he really wasn't mentioning that
Right.
all the kind of action was starting to happen over there. But it's funny, now with prices changing a little bit, we're seeing more people return to the Hamilton area.
Yes.
Because prices have come down. I know interest rates are higher,
Yep.
so carrying costs, but because the prices are down,
100%.
it's kind of slowed things down a little bit, and people are checking out Hamilton again.
Yeah.
So
I actually did a presentation on that recently, where I did a side-by-side comparison of if you were to buy at the peak, and I was comparing to, let's say, when the legal duplexes were selling at they went $1 million, 1.1, 1.2, even saw 1.3. and then what the interest rate was and what the rents were, and, you know, just basic, and then what your cash flow would be, let's say. And then we said, okay, well, if you were to purchase it now at a higher interest rate, rents have gone up, prices have come down, and how that looked, and you're actually a little bit further ahead.
Yeah, interesting, right?
Right? Yeah.
Because the rents have changed. There's so many variables in this. I mean, the media, all of us just tend to naturally gravitate towards like, hey, what's the price?
Yep.
But when you take interest rate and carrying costs and rent differences, like you're saying, Nick, and then Tammy, when you present it like that,
Yep.
it can present different opportunities. So you were really doing duplexes at like 1.1, 1.2.
Yep.
What was the highest you saw? 1.3?
There was one that I heard that one for 1.3.
Okay. And then with your clients, do you do a lot of duplex stuff?
Primarily.
Okay, so primarily
Yep.
duplexes. How are the conversions happening? They're hiring contractors, or are you buying it already done as a legal second suite or duplex?
Both. I've done both. Yeah. So I would probably say I've done I could have done maybe about 40 at least conversions with my
40
clients.
conversions.
At least. Yeah. Probably
Wow.
a little bit more. Yeah.
Okay, so you've seen everything at this point.
I've seen a lot. Yeah.
And-
And that's Hamilton, Welland, Brantford area.
Okay, so in Hamilton, when you're doing that, what are the rents roughly on a duplex on a Hamilton, legal second suite conversion?
Yep. Right now we're seeing for a 3-bedroom main floor unit about 2,400. I have heard some higher, but I always like to be a little bit conservative with my clients and tell them what I'm seeing as opposed to what somebody's
Yeah, there's the
saying.
one-offs. I mean, the
Yeah.
one-offs we've seen are close to 3,000, but it is a
Exactly.
one-off. Yeah.
And are those inclusive of utilities, which are still really good numbers, but
Yeah.
just stuff that you
Yeah.
have to take into consideration. So 2,400, I'd say I feel pretty confident about with the main floor plus utilities, and then the basements are about 2,000 now.
And that would be a 3-bedroom main floor.
Three
two,
up
2-bedroom
And
basement.
2 down. Yeah.
Wow. And
Bedroom
then
basement, yeah.
the people renting them out, are they working? Do you have a taste for like just the majority? Are people working in Hamilton or living in Hamilton and working all over the place?
Most working here. Yeah.
Yeah, so working
right.
in the Hamilton area.
There's a lot of students applying as well.
Mm-hmm.
They will pay higher rents in the duplexes, and the duplexes aren't even close to the school.
All right, that's what I was going to ask. But you're not in the
you're not
the
even-
typical student areas,
Yeah.
and you're still getting the student demand.
Yeah.
We were looking at the numbers, the enrollment numbers from the universities over the last, what was it, the last 10, 20 years, I think we looked.
Mm-hmm.
And just the enrollment numbers for universities have skyrocketed, especially the international students. It's changed the dynamics of all these university towns a lot. Like there's been a mass shortage in housing for the students. And it's why a lot of these purpose-built student properties were popping up and things like that. But what we found out, it looked like pretty strong competition at first. And some of them may turn out to still be that way. But a lot of them don't want to live in those types of places just because of the rules, the way they're managed. They just really want to be in their own place.
And if they're paying the foreign student cost to come here, usually they're coming from a family that has money. So they
That's
can
true.
afford to, because I remember when I was
Yeah.
just thinking about this, when I went to Arundel, which is I now think called UTM or University of Toronto, Mississauga or whatever it's
Yep.
called. And I drove by like 3 or 4 years ago. When I went there, like none of us really had that much cash. The parking lot for students was all beat down cars. We would go to the Blind Duck pub. I don't even know if it's there on like for like $2 Thursday beers or whatever it was. It was like a beat down place in the middle of like a forest in between a couple buildings. And then I drove by like 4 years ago and I take one of the videos that we did for
Yeah,
Rockstar.
it's like Porsche.
It was
and
like-
Range
Yeah.
Rovers.
Yeah, it was like, no, literally, I was a Land Rover, Porsche. I get out Gucci belts,
Yeah.
Gucci attire everywhere. I'm like, what is happening? The buildings are glossy, brand new glass. I'm like,
Yep.
what is happening to this
And if you would
university?
see that before, you would think, oh, so how's your dad's car? Nice.
Yeah,
Not
yeah.
now. It's their.
It's their car. Yeah, they're like, no, that's not my dad's
Yeah,
car. I
that's-
bought that
yeah.
car. But yeah, if you're paying the foreign student fee, we were renting out one of our York University student rentals, and the checks that we would get from students, this is like 10 or 15 years ago, would be like from the estate of, we had a bunch of students coming and, they were paid for like, and literally in the top of the check, it said, estate of so-and-so. Like, man, these people are coming from.
Yeah, their tuition substantially higher than and I think even a lot of people aren't even aware of that. But international students, when they come here, I forget the percentage. At one point I knew, because closer to school, when I knew people going through university, I knew the numbers, but it was a lot higher, like multiples higher of what I was paying when I was going through school. I was surprised. I couldn't believe it.
And it's kind of nice that you're getting students into these properties because now you have options. You can rent them out to students, but if they're legal second suites, the investors that have some of these properties, they can rent them out to multiple different family kind of formations.
Yeah.
Single person who wants it, a small family who wants one of these things.
You ever have students in one unit and a family in another unit, in like the same property?
Would I?
Have you ever?
No.
No. Yeah, I'd be curious how that would. With certain students, there wouldn't be a problem, right? But Do you end up you getting student supply? Are you renting some of these to students even though they're not in the student area or no?
No.
No. Okay. So
Oh,
Yeah.
got it.
Yeah.
Okay.
We're seeing a lot. There's no shortage, obviously, but personally, no, I haven't. But I don't know.
And what the rents that you're seeing at 2,400 and 2,000 is what is the St. Catharines Welland market? How different is it?
So I would say I would label it Hamilton and then Brantford and then Welland.
Okay,
let's
so
say.
yeah, what's Brantford roughly?
So Brantford would be all about, let's say, a couple hundred less each one. So Welland, I would say we're probably at about maybe 18 down, 2,000. No, maybe about 2,000 up.
Okay,
And then so Brantford maybe 1,900 approximately,
got it.
and
okay.
then the main floor 22.
Okay, and now I'm putting you on the spot. Purchase prices in Hamilton, Brantford, and Welland for a home that you would do this on?
Yep.
Roughly, what are the
Yep.
ballpark purchase prices right now? And we're recording this in like September 2022, and I know things are changing, but just roughly.
Well, there could be approximately 50 to 100K difference between them. So let's just say if I was buying a property in Hamilton, we've seen some right now going Hamilton Mountain Bungalows. These are the ones that are perfect for conversions for about, let's say, 650 on the lower end right now.
Okay.
And then in Brantford, they're not too far behind actually, so they're probably a little bit similar right now. Yeah, theirs will probably come down just a tad, and those are different. Like there's certainly ones going much higher. Like don't get me wrong, there's Hamilton House is still selling 800 and so on. Some of these bungalows just depends on the finishes. And then Welland, I'm going to say we're starting to see 550 for some of the nice houses that we do conversions on.
Oh, got it. In Welland, 550.
Yeah, I think the hard part for everyone for everyone to know right now is that because everything's changing and has changed so quickly, it's that a lot of people want to do these burrs and they want to be able to pull their money back out right away. And I feel like we need to kind of go back to where we did in 2017, 2018, when we started doing this, and we would buy these properties and hold them and not necessarily burr immediately. Everyone in the last couple of years were certainly doing pulling out their money within 3 months, 6 months, and so on. Where now we might go back to having our money in the property maybe for a couple of years sometimes before we're going to go and pull it out. It just depends. I make sure I'm really clear with our buyers and our investors. You know, if you're going to invest in, let's say, Welland, for example, our goal is to get that renovation cost back out. And because the market was going crazy, we were getting that plus our down payments. I had some people that even made more, you know, pulling their money out. But knowing that hopefully we'll be getting about that, you know, renovation costs back. It depends on the refinancing, right? What's coming in. But as the numbers are coming down, a lot of these appraisers can't even keep up with all that and know exactly.
Yeah, and on top of that, the appraisers are being super conservative. They're basically being threatened by the banks. Don't fuck this up. Yeah. And so they're being super conservative. So even if prices are coming down, sometimes the appraisal comes in even lower. Yeah. So it's tough. And for anyone listening, a burr is just, you know, someone buying the property, renovating it, renting it, kind of like refinancing it to pull out ideally everything they've put in on the down payment and for the work to convert that into a duplex and pull out all their money. And now you have a zero down property because you got all your money back and you're kind of off to the races, use the money again. Right. But yeah, I feel like expectations might be a little bit off now because people looking to do that, you're going to have to wait.
Well, there's the prices and there's the interest rates too. Some people, what I found too, is after they refinance the property, and then now the rates have gone up. They're like, well, you know, now my cash flow's non-existent, or maybe I'm negative. I'm like, well, yeah, I get it, and that's not that's not perfect. Like we don't want to be in a perfect world. You want to be negative cash flow situation for sure. But if you have no money in the property, you kind of like, you know, you got to be realistic about it too. It's like very rarely do you have an investment where you don't put any money into the investment and it spits off cash flow for you in any sector, not just real estate. Yeah. Right. So sometimes I think people discount, because we've seen that from way back when we were doing like just primarily rent to own when we started, like however many years ago, it was they would discount, you know, they would be cash flowing $100 a month, but up front as an upfront payment for the rent to own, they collected $20,000. Right. And I'm like, so they're like, well, it's only $100 a month. I'm like, well, you have $20,000 in your hand. Like you kind of, did you just forget about the 20 grand? Yeah, you know, so it's kind of,
I think it's been easy street for investors for like a few years. I remember one of our student rentals, I couldn't refinance it for years because no bank wanted to touch it because it was a student rental. So they're like, I don't care. They would tell us, we don't care how much equity you have in the property. Wow. Until one day, I don't know if I should say the bank name, but I guess I just did. The bank that had done the original financing on it just decided they weren't going to renew because it was student rental. They did it as a student rental, declared student rental, but they had decided, I guess their risk profile had changed. Maybe they had too many in that area, whatever goes on with that kind of stuff. and they decided they weren't going to do the renewal, and I had to go get other financing. And at the time, I stumbled into, I didn't know what monoline lenders were at the time, and it was one of the mortgage brokers that we work with kind of explained that there's these monoline lenders. They're like lenders who don't have bank branches, but they're doing hundreds of millions of dollars in mortgage lending through mortgage brokers here in Canada. And I think it was an Australian...
Yeah, that was coming into the market.
Yeah, it was an Australian fund that was coming into Canada, and they did it for me. As a student, declared student rental, and I refinanced, and I finally was able to pull everything out. But that took me like 5, 6, 7 years, however long after I owned that property.
At that time, financing student properties was even worse than it is today, for sure.
Tricky.
Because it got very easy for a period of time, and then it's kind of like everything. It gets, goes hard and easy. So it got very easy, and now it's a little bit trickier than it was just a few years ago. But not nearly as hard as it was, back then.
I wonder, Tammy, if you're going to be faced with a lot of conversations around real estate now, because we were just talking about the interest rate move. And in the Canadian media in the real estate industry, it's very focused on the impact that interest rate move is having on Canadian real estate. Mm-hmm. But these interest rate moves are kind of in lockstep with what's going on around the world. And it feels to me that we have this liquidity pullback where, where a tsunami kind of
well, it doesn't feel, that's what
it is. Yeah. Like a tsunami kind of pulls back before like the big wave comes in. And I just feel like everything's pulling back. A lot of people might psych themselves out on what's happening with real estate because they're focused on the real estate price as the definitive indicator on whether they should buy or not. And if you don't look at what's going around the world, because it seems to me the liquidity that's going to come rushing back into this world is going to be more than we've ever could have imagined. Because Nick, I think at the U.S. 10-year bond, I know I'm going on a tangent right now, but at the U.S. 10-year, I think right now it hit 3.5 yesterday. I don't know if it's still there, but at 3.5, if the existing $30 trillion of U.S. debt gets refinanced at that new rate over the next few years as the old bonds mature and have to be bought at the higher rate, it turns the $400 billion in interest payments that the U.S. has now, which is $400 billion, it turns those interest payments into $1.2 trillion. So that's a difference of $800 billion. They already run large deficits. If we're going into a recession and they need $800 billion of new money over the next few years to kind of fund their own debt, the amount of money printing that's about to come our way, like I just mathematically, I'm like, wow. It's like the tide's moved out. And the Bank of Canada is still saying, hey, we're going to move it out further. We're going to raise interest rates even more. But when you look around, I feel like telling everybody who owns good hard assets like a nice property in Welland or Brantford, hold on to that freaking thing for dear life. Yep. Because the liquidity or the money printing that's about to come in is going to be epic.
It's hard to visualize and think that makes any sense. But if you went back 5 years and looked at what happened in the last 5 years makes no sense either. Do you know, like, it's so hard to think that that's actually like, what, they're just going to pump all this money back in based on what happened already. They saw how much that screwed things up, but we're already seeing signs of it. Like, so the most obvious ones are because of the fuel price problems in Europe. There's multiple countries talking now about how much money they're going to use to prop up the energy companies or give them to people directly to offset these energy costs. And even some states in the U.S. have come out and said, hey, we should be just giving people money to offset these. At that time, it was rising fuel cost, like gas prices.
My favorite thing on that, did you see some European Union minister of some sort said 2 weeks or something? This must be a joke, but it was 2 weeks to flatten the hump. Did you see that?
Oh, yeah.
Because energy prices had gone up, and I guess they were saying it's like a hump. I guess they didn't want to use the word curve because of the whole COVID thing. But I was like, did they really just say 2 weeks? It must be in my imagination. I think they must have just said, we're going to try and flatten the hump. But it was to get Europeans to like turn down their energy consumption during peak times because of the energy costs that are going like so high, or the shortage of energy. Yeah. But it seems like that's kind of where we're at.
Well, you're seeing signs that that's how they're looking at solving these problems already. I'm like, is that, yeah.
And
so
I know
if you combine that with what you're saying, because it needs that to grow, and the problems with the deficit spending and interest payments on the debt and all that type of stuff, and you combine that with, if these are the signs that they're showing of their playbook right now, until you see other signs, it seems like a realistic scenario, even though the numbers behind it and the thought of it seems kind of ridiculous at some point.
So where did these Hamilton, this is where, I know we're in a period where property prices are coming down because as they're adjusting to the higher rates. Yep. But I'm just like, in 2 or 3 years, like, where are these property prices going to be? I feel, if I had to guess now, I'm going to say much higher
Property price, like,
Then our last peak, you mean?
than our last
Yeah.
peak.
Yeah.
Yeah.
Mm-hmm.
Like I
or
feel
maybe they go up to where the last peak was. And I mean, the peak was like a 1 week peak. Like this whole peak thing is to me,
yeah,
is
but
a little
still,
bit
but
of a,
we can use that as
no, I know, but it just means it's like I'm a little bit jaded with when people are like compare like, well, this thing sold in like and now it sells for this. I'm like, the peak was 30 days. Maybe it was 2 weeks. It wasn't really like this prolonged, like it was a 6 month period where things were really kind of
or 10 years of prices.
So I'm just a little bit. I think I'm more jaded by the media articles.
It makes for a good headline because the percentages of a drop look good off the peak.
But even if it climbs up to that point, let's say it climbs up to that point, but it may be hopefully at a little more of a stable pace. Like because what we saw over the last 3 years is ridiculous, and we were saying it was ridiculous before. Unsustainable, not healthy, not good for anyone, just not good. That's what they would want to make it a sustainable move, so that they can have their agenda with it's got to go at a different pace, right?
It went up too fast.
Well,
and then came back down to
it was like 50. It was 50% in 2 years.
Roller coaster.
I have a feeling it's going to go up faster than anyone imagines, and the reason
I just hope it doesn't.
I hope it doesn't as well. It's better for our society, our community here that it doesn't. I just feel we're at the end of a system, and you just start you see the volatility. It's kind of like something's breaking, and the volatility just like shoots down, shoots up, shoots down, shoots up, and each move is just more and more volatile. And the math on this, and I know I just keep talking about the math. It's just these are just like this is the actual cost of the interest payments on their debt. They have to print this money. Like I don't get how this works. Like they must print this money, which means M2 or the monetary base or the amount of money circulating around is going to increase. And everyone can argue whether it stays in the financial system or if it leaks out into the real economy, but we just have a lot more money coming our way. And I think it ultimately affects Hamilton, Brantford, Toronto, Welland, because Canada's going to copy it.
Well, it affects everything in the world.
It affects everything in the world. You can call it a devaluation of the currency, inflation, whatever you want to call it.
But if the global reserve currency is doing that and everything, the vast majority of things are priced in some way, shape, or form in U.S. dollars. I think how much trade is done in, the majority of trade is done in U.S. dollars, right? There is the euro and there are other currencies, but the majority is done in the U.S. dollars. Then it impacts everything.
I think it becomes the new normal. Like I think if you grow up in Argentina, you're very used to carrying US dollars and something, the local currency for what you need it. And Canadians aren't used to that. And I really feel we're just going to enter a time where the Canadian dollar is looked upon like, holy crap, this thing's pretty volatile. And you have these other assets in your life that are much more kind of sustainable. Tammy, I got way off on the tangent there. It's just top of mind right now. But Tammy, I'm curious, when you got into real estate investing, did you have to battle any mindset stuff? Like I know you had James Maggs, who was a good friend, but did you have to like overcome anything of like, most people think, oh my gosh, I'm going to lose everything if I get into this. That's what Nick and I thought, I think many times when we were younger, and we were like, holy shit.
I barely had anything when I started.
Yeah, like
so
I guess
was okay with it.
You have nothing when you start. But
personally, no, I would say only because I had James, and I was, like I said, worked as an assistant, so I was really part of the team for 2 years.
So you saw a lot.
I saw a lot, learned a lot. I didn't miss a meeting. I didn't miss anything any event that they were all having. So I had a good 2 years of seeing all that, and not even just seeing people or hearing, people listen to podcasts, it's not just hearing it. It was my friend. It was one of my best friends. And so I got to witness that. But that being said, it's really funny because I can sit there and I can talk to my clients and I can say, okay, so what's your budget at? This is a profit. This is great. This is going to be good. This is going to work for you, and so on. And then yet when it comes to me and I have to buy my own property, I'm like, oh, okay, hold on a second. And, I start to go into a little bit of panic mode just for myself, where it's so easy for me to tell everybody else what to do. And then when it comes down to myself, as much as I completely believe it and I trust it, it just, it does hit a little bit different. So when somebody says to me, I'm a little bit nervous, or I'm a little bit, unsure of this and that, I get it.
You can empathize.
I can, and I get it. And then I can also explain the pros and cons, all of it.
Yeah. And then what are you seeing around contractors right now? Because most contractors we see are just like so far behind, or, can't get labor, can't get material. It's a mishmash of disaster. Are you seeing jobs get completed? Because you're dealing with a lot of like conversions.
Right.
Have there just been more delays than normal in the last 12 months? What are you seeing out there?
So with the few contractors that we consistently use, things have still been great. They've had shortages of certain, like maybe windows at one time. Everyone knew those were behind schedule like crazy. I think, was it 2 years ago, when all the appliances were short, and you see things like that from time to time. But for the most part, with the consistent contractors that we use, there's a handful of them that we're constantly referring out. So far, everything's been actually pretty good and decent. Same as, working with the city and permits, and any delays on there where we were seeing delays before, we're not really seeing as much anymore.
Wow, so you have some
it's a little
contractors
bit
who
better.
are not overbooking themselves. Most contractors are slightly guilty of overbooking themselves. I don't think it's a malicious thing for most of the good ones. They just kind of take on more than they can chew, and things start blowing up.
They do, yeah. I think that's when you see some contractors that have failed, possibly, or it's usually from that reason.
That's what happens. They spread themselves too thin because they think they can do the work, and they can't do the work. But they can't do the work with everything else, or they set unrealistic timelines. If they just finished some other jobs and said, okay, I can start in six months. But part of it's like when the investor or the client's pressuring them, and they succumb to that pressure. They're like, I need you to start. Like, okay, we can pull it off, and it just doesn't work. Mm-hmm. Just like anything, because even when a job ends, it's never really over for the contractor for the next 2 weeks anyways. So that delays that automatically, because there's always little things that come up. And the last 10 or 20% of a job always takes longer than it should, like all the small details, because you need to specific things or specific trades that are booked or whatever. So yeah, it's something we've seen consistently. I'd rather they just kind of were more honest and say, I can't do it. But it's hard to, I think a lot of people have trouble doing that.
I don't even know if it's honest. It's just like they think they're helping somebody out, but they're screwing themselves and everybody else.
They're just making it all worse, yeah.
They're making it all worse, sometimes with good intentions.
Yeah, that all being said, though, for the last, I'd say good 6 months, most of this year, I haven't done as many conversions, though, that I have done in the previous years. So a lot of them were now looking at the prices and where they were at and deciding, okay, do I want to sell? So we had way more listings coming out than I'd say we had previously. I had clients looking for turnkey properties, and then a lot looking for single family properties with potential for growth on that property, either being the land for a garden suite or duplex in the house down the road. So we've been seeing a lot of that because some have a smaller budget or what they're pre-approved for. So some will come to me and say, I've got a $500,000 budget. And it was tough in that market to go out and find a house, but we found one particular client in mind bought a property in Welland, and it came on a double size wide lot. So it's a 60 by 120. And when I look, and the house is all the way to the left. And when I look at all the neighboring houses, I marked out all theirs. They're all 30 feet.
Yeah, that's great.
So I'm like, I can't guarantee that you can sever this lot. Like I can't own that, but if not, you certainly can build a garden suite in the back. So you're going to definitely have some options. So, we were able to get a lot more people in that way as well. So I'm just starting to have people now coming out of the woodwork, wanting to, I'm ready to go see houses now. Everyone's on hold watching the interest rate hikes and so on, and a lot of, nervous investors. So a lot more people wanted to go out now and also looking for conversions. So I think that's going to be picking up more too.
Those are my favorite. When you get properties like that, not severing a lot. Yeah, that's even better. But hey, anything that gives you options, where you can, it's not just kind of stuck in one strategy. You can do multiple things with. That's
So how many? Just think of how many of Tammy's clients are going to have options with garden suites on some of these big Hamilton properties.
I have the best story. We just locked in an amazing property. I went out with a client of mine, and we looked at this house in Welland. And I said it was $650, come down to $600, which still was actually decent for the price. The house is already a duplex. Has always been a duplex with the city. It's also on a double wide lot, but we looked into the severance, but it can't be done, which is fine, or it would be too small, a little awkward. So, but also has a 550 square foot garage, double car garage in the back that we know that we're going to be able to turn to a garden suite. So we already have this legalized. We just need to renovate it because it's outdated. But it was about $600,000. We went to look at it in May, but there was a tenant in there. So the owner who lived on the main floor, she had moved into a nursing home, and so that was vacant. And then the upper unit, the tenant was paying $750 a month, but it was there for 14 years. So you're like,
oh my gosh,
what are you gonna do, right? Yeah. So we passed. We said, okay, well, we'll wait. The house had sat on the market for a while, and then it had dropped to $550, and then it had dropped to $525. And then I went and looked at the listing again, and it had been updated in the remarks that the upper tenant was moving. I called my client. She's like, let's offer right now. Wow. Done. So it went down to $525, and we offered $475. And because it had sat so long, and someone had done two things. Someone had put in an offer for financing, and it fell apart. Someone else had put an offer in. They did home inspection. We knew, she declared what came up on there. We knew what it was going to cost. We ran all those numbers put into play. But we ended up offering $475, and they took it. Holy and they took it because we just made it conditional on us getting to see it because we hadn't seen it in months. But that was it. And they were like, okay, let's just do it because it had fallen apart.
Yeah, it was time to get rid of it for
was
that.
time.
Wow.
So we got this property here that's a full
Going to be a duplex with a garden
two-story
suite.
house, 2 stories above, both units above, and a garden suite. We just went out yesterday with Andy and did all our measurements.
Oh my gosh,
that's great.
And then the rent on that thing, you're gonna that property's gonna generate like close to $6,000, maybe in between $5,000 and $6,000 a month in revenue.
Yep.
Bought for $575.
$475.
Sorry, $475.
Plus renovation costs.
Plus renovations, because I was
600 all in with the garden suite.
Yeah.
A little bit more even.
Yeah. But if we
have to
just
go.
keep it, but you're hitting a property that's like the 1% rule.
No, the numbers still work out
I know.
great. Yeah.
Like we never hit that anymore.
No, so excited.
Holy
excited, yeah.
smokes.
We have
That's kind of the flip side, I guess, of what's going on.
for investors.
Yeah.
For investors. The thing is too, though, like it's not like, there's still been strong appreciation on this property for the homeowner too, that was able to benefit from that over time as well.
That's a good point,
right?
because I have some clients who we were selling their legal duplexes, and again, they saw the 1.1, 1.2, 1.3, and they're like, well, I want to sell mine. But they had tenants, and the tenants were paying lower rents than they're getting now, or people are getting now. So, and one of them, they had a tenant in there that had smoked. It smelled. We had to get the tenants out. It wasn't going to sell. So I had 2 clients who had both waited to get their tenants out, took a little bit of time, got them out, got everything in there, cleaned it all up. Well, by the time it was time to sell, the prices had obviously dropped. Yeah, significantly. I have actually quite a few clients recently that had sold their legal duplexes because they were scaling up. They wanted to pull that money out. So even though, let's say one, for example, sold it at 800, another one I sold at 870, which sound like low numbers, we paid 470 for the one house. The other one was like 600 at that time because it was much bigger and 4-level backsplit, very rare. You don't see all those, but yeah. So if you really put into perspective,
like even though the prices have come
and
down,
that was the point of real estate.
They're about even. I mean, it depends. It depends on pockets, types of properties, stuff like that. But they're about even year over year. So they're they haven't moved much, even though they've come down. So they've had this big run up and come back down. But if you zoom out, so for people that have bought maybe right at at February of this year, yeah, they're in not the greatest equity position right now. But if they're having income and it's a good property, there's a longer term scenario that could still work out quite well. And for other people, if you zoom out for 2 or 3 years, the numbers are still they're very good, right? So
we've had multiple investors tell us they're selling properties in the last couple of years because some of them have been buying now for like 10 years. So some of them are just like, hey, I want to buy a cottage. I'm going to sell a couple of rentals, or I want to buy a boat, or I want to move out east. We have some Rockstar members who they've moved to Mexico. They've sold their Canadian house, kept their actually that's a reverse. They sold their primary place of residence, kept their rentals, moved to Mexico. Another investor moved to the Dominican, kept his rentals here. He's in the Dominican. So it's interesting as people start to build an asset base around them. Their choices in life kind of really change in ways we never thought. Yeah. We never thought we'd see people like moving to the Dominican Republic, Costa Rica, Mexico.
And it's weird. These properties have done so well for them over like people that have had it over, let's say 10 years. Like you use that as an example. They're like, I really like to do this. I don't want to get rid of the property though, but that's where the funds are to do what they want to do. And the conversations I've had, I'm like, guys, but this is a lifestyle decision. Like, why did you start investing for the first place? If you invested in the first place to get whatever this is that you're after, well then
go for it.
If you have a few assets, like if you had a few properties and you have to let one go, well, you let one go because you have to live your life too. Yep. Sometimes that's, I think, forgotten in all this, that sometimes it becomes all about the numbers, right? And it's like, well, it's a means to an end still. Right. I don't know. That's the way I look at it. So it's like you gotta make the lifestyle decisions. You do the investing to make the lifestyle decisions. So when you want to make those decisions or those moves to Mexico, to Dominican, or whatever it is, you want to buy a boat, you're able to do them.
Yeah, absolutely. I think that's what James actually did too. It was time they wanted a big pool in the backyard and they wanted to do everything they needed to put back there, and sold off a property, paid for all that, and thanks.
Yeah, but that's for his family. That's great,
exactly,
right?
It's amazing what landscaping costs these days.
Oh my!
But I'm curious.
Hey, on a side note, just about the cost, I just heard this from one of the contractors. They were going to do a flip. It took forever to get the permits. Their lumber quote, so this is in Oakville. Their lumber quote last year was in the $80,000 range. It was like mid 80s. They got their new quote back mid 40s. So the material costs have come. So they're like, look, the prices that they might sell for have come down, but they're like, our material costs are going to come way down from what we thought.
And that's why I think a year from now rates are going to come down, because the leading indicators of what we're seeing seem like they're all coming down. Bond rates aren't coming down yet, but even oil
Yeah,
has
did you see
come
the oil
down.
prices
Yeah.
today? Like
Yeah.
coming down, and that's after they announced that cut.
Yeah, so like everything seems to be coming down. So I'm like, this is kind of weird. They're raising into what clearly looks like leading indicators telling us there's a recession coming when you should be cutting, but they're raising rates. So I feel like your 1 year rate kind of gamble, if you call it a gamble, I don't know. I feel like that's going to be a good move.
Well, it's fixed. You can lock into another fix that is. It's hard to believe where the bond, like the bond, market is going to go to a point where those fixed rates jump substantially from that point.
I guess the only way they could continue to jump even higher would be, and Tammy, we were talking about this, I think, before we started recording a little bit, like if inflation overall doesn't come down, if stuff really starts breaking on the currencies, get devalued to the point where inflation just is ripping, rates can stay high in that environment.
They can, but so that's interesting, because if you look at housing specifically with this, right? Because I was trying to extrapolate this out, because I'm like, that argument right now, if someone's listening to it, they're gonna be like, well, your inflation's ripping right now, but house prices are coming down. So this, this whole having an asset in that type of environment that argument, it's kind of doesn't make sense in today's world, because we're seeing that come down. Now I know they went up too much, but so they had to kind of correct to more of longer term trends that made some sense. But in that environment, then all the raw materials start going up, all the replacement costs for these houses go up, and then the house prices even with higher rates, the house prices have to start pumping up again, because the replacement costs get so high. Now, if everything comes down in like a deflationary environment, then they can stay around where they are right now, or wherever the case may be, right? Because that's what we're going through right now, and we're not seeing that. So that's the counter argument to what you're saying. I'm just wondering if people would be thinking about that. But then you got to extrapolate it out a little bit further to kind of look at
nothing
numbers.
moves in perfect sync.
Exactly. Yeah.
I'm just hearing you say that. And Tammy, I don't know if you know these numbers. Nick kind of was you were looking at appreciation numbers in the greater Toronto area from 69 to like current day. And I think it's like 6.8 or around 7%.
It's really, it's interesting. I have them here. Hold on.
I think it's like, it was higher than I thought. Cause I thought when we were looking,
so the average home price from TREB, 69 to 2000.
So this is TREB data, which will be mostly Toronto. Other stuff gets listed in there, but it's mostly Toronto.
Yeah, it's not an exact science, and it's all the areas and all the types, and but it went from 28, so 29 basically, it was 28,900. So that was 69 in August 2022. It was just under 1.1, excuse me. So 7.06% over that time, which is higher than I thought. I thought long term it was closer to.
So sorry, repeat that. From 1969.
From 1969 to August 2022. It was a 7.06%.
That's the average annual appreciation rate increase in price.
The average, the number went from 29,000 to 1,074,000.
And is that skewed heavily the last 10 years?
No, because what's interesting is the last 10 years, if we look at, where was that? Oh, here we go. 2012 to August 2022. It was actually 8.02, so it was slightly higher. But if you go from 1969 to 2012, it was 6.84%. So only marginally lower than the time from there. Because by the time you're going from 69 to 2012, even with bigger moves, it can't change because there's such a long time period. It can't change the average that much.
So the average annual appreciation in this area, I'm generalizing, has been 7% a year.
It's closer to 7 than it is to 6. Yeah, I thought it was.
So it was 5.5.
Yeah, that's what I thought too.
Wow. I think where we got 5.5. I think that was CMHC data that I was looking at like 10 years ago for Canada.
Maybe, yeah.
Usually run ours at 6.
Yeah.
We used to run them 4.
I remember
between 4 to 6, but we usually run
and 4 seems really, really kind of conservative. So you're running that when you're just extrapolating out someone's purchase just to look at the future value of them?
Yeah. Checking out their
So if you're doing 4%, Tammy's being super.
Well, no, we do 6.
They do 6.
Oh, sorry, 6.
Yeah.
Got
we
it.
did used to, and then we had changed it to 6.
I remember when we were doing some
when they went up recently, we still left them at 6.
Yeah.
Just to see.
It's good.
Well, he didn't put like 18% in there. Yeah. Okay.
Could you imagine you tried to tell someone, yeah, look, and when you buy this property, so it's going to have 25% appreciation next year and 33 the year after.
Yeah.
They would just look at you like, what kind of con artist are you?
Yeah. You're insane. What are some investors, I'm curious, telling you when they meet with you on why they're getting started in real estate? Like, what are some of the things that you're currently hearing? Has it always been the same kind of things, or has it changed at all? What are some of those? Quit my job, build cash flow.
the same things.
Yeah.
Yeah.
Asset base.
Yeah. And I do find that we used to hear more people saying, I want to absolutely quit my job and just rely on real estate. I'm hearing personally a little less of that.
Why do you think that is, if you had to guess?
Yeah.
Are the people coming in just have a little bit more money, so they aren't looking to quit their job? They're just trying to build up assets?
Yeah, most of them are, I would say that. It'll be only because I would say the few clients, they're not all talking about it, to be honest, but would say, you know, my goal is to have maybe 10 properties would be the goal for them to have. And so they're not really mentioning the retirement part of it. There's only a handful, I'd say, of people that would say, okay, listen, I'd really want to quit my job. But even that's, you know, we try to be realistic about it.
Yeah,
you know, I've seen people doing it, and it's not always just completely quitting your job. There's a lot of work still, right?
Yeah.
People think. But
and then what did you earlier? You mentioned you had an investor who was like leveling up. They were selling some duplexes. Yeah. What were you talking about there? What were they looking to do?
Well, that particular client was the one where we had purchased it for $470. We ended up selling it at $800. This was a smaller house in Hamilton, a bungalow, 2-bedroom, 2+2. And the property did amazing for him. I think to this day it was still cash flowing like $700 a month. And it was hard for him to get rid of. It was one of the first ones we bought together. We've done multiple. And there's the property that we just picked up. It's funny because we call it the unicorn property, but we just picked it up in Brantford. He closed on it just a couple months ago. And when we went to go look at that one there, he was a little hesitant to go see it because it was done up so nice inside. He's like, oh, come on, this is going to sell for too much. I said, let's go look anyway. You never know. So we went to take a look. It already had a basement set up for a duplex, but it it had the bedrooms, the bathroom, and so on. And it also had a massive garage in the back. So I said, let's go check it out. You never know. Well, we ended up winning. We ended up offering, and we ended up getting it. And for the price that he wanted, he said, I really don't want to go higher than this. This is what I want to pay. And so we had won that, which was fantastic. But it turns out that the person that had, we can't come to learn this, but the person that had owned the house was a builder, a contractor, and he did the basement by code, but just didn't run it through the city with the permits. So it had the fire rated drywall and it all of the electrical, the fire rated interconnected smoke detectors. The windows were massive. They didn't even need to be egress. They were probably the biggest basement windows I've ever seen. And so the conversion for that one, and this is not normal. This is why it's the unicorn property. So people know this.
No, they should call you and you should find more of these, Tammy.
All they got is
Tammy sells unicorns.
It's all he had paid was the permit. We did a little bit of work there. So the $10,000 is what it cost him at the end of the day to convert that legally. And then the garage already had water, furnace, gas. It had everything set up. The only thing we have to do is sewer and then do the renovation. It's going to cost about $70,000. So I pulled out the money to put into that. And he had another property that we were flipping on the go. So that's worth it. He's like, you know what? Peace of mind. It's going to be better for me to go ahead and sell this one because this other one we have is going to turn into 3.
It's so good. And then where are you seeing the trends with garden suites and stuff? Are some people starting to do them? I know you said you were talking to Andy recently. Yep. Is this starting to happen now?
Oh yeah. So I have quite a few clients that have already started the process in Hamilton, Brantford, and Welland.
And what are they expecting? Do you know ballpark what they're going to spend to build these things?
It really depends if there's already an existing garage and if we can use what's there or not. So it could range, like that's the lowest, probably 70. But again, they don't usually come equipped with everything like that. So I would say maybe about 100, 150 if you have an existing, and then it can climb up to there too, 250. Depending.
And the city's handing out the permits on these things.
So Hamilton, my clients have had to get some minor variances and a little bit of kickback there, but it is happening.
Kickback from the city or the neighbors?
Neighbors, sorry, you're right. Yeah, neighbors. And but still managed to get through, so that was good. And then Welland has been phenomenal to work with, and so is Brantford. But I would say too, one thing that's made it really easy is that Hamilton has changed one of their bylaws, especially when we're coming to do conversions for duplexes, and then it's going to come into play for the garden suites, but they changed the parking rules, and that was the biggest obstacle we used to have in Hamilton. And so it would really limit the properties that we could look at, and now they've changed it to allow for the one parking space. There's obviously still some measurements that we need to account for with along the property lines and the house lines, but that's made a game changer there. So we'll be able to do a little bit more in Hamilton. The biggest thing is that they all have their different set of rules for the garden suites in each city, and it's going to depend on setbacks from the property. So depending if you have a house that maybe has a nice deep lot, which is great, but if the property itself is sitting further back into that lot, then
You
it's
don't
gonna
have
come-
enough space.
You don't have enough space. So you have to make sure you're.
And what are
minimizing.
people building? Is it like a 1-bedroom kind of garden suite, a bachelor,
The goal is a 2-bedroom if you can.
a
But
2-bedroom garden suite?
yeah, the one that we're gonna
Yeah.
do in Welland that I just mentioned, we got 475 is gonna be a 2-bedroom.
And how much do you think you'll
And that's
rent
about
that at?
550 square feet, so it will allow us for 2. And then anything under maybe 450 or so square feet, 400, those can be bachelor pads.
And you're
And-
doing a 550 on 2 stories.
No, that's
You're doing a
one
1 story?
Yeah, but this one here actually has quite high ceilings, and we're gonna leave them all open, and they're gonna look like a vaulted ceiling in this garden
Oh,
suite.
super
It's
So,
actually going to be really
Yeah.
nice.
Yeah.
so that's gonna be so nice.
And then if you had to guess on what that's going to rent out for, that one in Welland, the
Yeah.
2-bedroom one.
I am, because it is a little bit of a guess, obviously,
Yeah, I
because
know.
they're new.
Yeah.
But I think that it's going to be very similar to a 3-bedroom main floor unit. So if in Hamilton we're getting about $2,400 for a main floor 3-bedroom unit, I think a 2-bedroom garden suite will be very
Come
similar.
on, really?
Well, because it's detached completely on its
No,
own.
yeah, so you have
And-
privacy and stuff.
Yeah. So even though I always find actually a lot of people discount what a 2-bedroom can do for you because everyone wants to go to the 3-bedroom. But if you have a 2-bedroom, spacious, sometimes even not, but it's completely renovated, your rents could be very similar to very close. I've had clients get maybe $50 less than a 3-bedroom would get because of how nice their 2-bedroom unit would be.
That's what I'm interested to see with these garden suites is once a number of them start getting done and we start seeing what the rents are,
Yeah.
it's going to be interesting to
Holy
see because it's a
shit.
little bit of an unknown at this point.
If you're
But that's
potentially
like
adding
guessing, yeah.
$2,000 a month in new revenue on a property.
That let's say you spend $200,000 to make 2,000.
This is
monthly,
where
you
I
know.
don't think, how we always talk about property prices, like can property prices keep going up forever? I know they've come down now, but in general, can
Yeah.
they keep going up like this? One Hamilton property used to rent out for us for like $1,500 a month.
Mhm.
One, that same property now has the potential, depending on lot size, you have to invest money into it. I'm generalizing here, but has the potential to be earning 6,000.
Yeah.
We're talking multiples in revenue higher, multiples. It's just crazy what the same property is renting out for.
Yep.
Like that's just kind of mind blowing. So your dollar is just going completely in less to get less space is really what's happening because you used to be able to get a fully detached house on a full lot for $1,500. Now $1,500 barely gets you a basement in a similar house. So the amount of revenue that the reason I'm bringing it up in this way is that the value of hard assets keeps increasing, but sometimes people don't see it because the hard asset now is generating so much more in monthly revenue. Like it's just astonishing to me. Would you have ever thought a property like that in Welland can be generating something like $5,000 to $6,000 a month?
No, very
No.
few people did. I'm just doing the numbers in my head. So if you did spend $200,000, you get $2,000 a month. Call it so it's 24. Round up to $25,000 a year. So you get 1/8 of your investment back every year based on that. There's maintenance and stuff like that to think about.
Sure.
But the numbers on it are pretty good. I mean, that's 10. What's that? About 12% and change. 12 and change.
Yeah,
12 and a
something like
half,
that.
something like that. And then so you get that from the rental amount. And then what I'm also interested to see as these get completed, I've been waiting for some of the early projects Andy's been working on to kind of see is what price points are they selling at? Because with the 200,000 that you're putting in for the garden suite, how much are you getting in the price lift of the 200? Because you're gonna
I think at the
You're-
beginning
you're-
it's going to be like student rentals and banks won't acknowledge it. You're just
well,
going to hold them.
but the buyers might. Like even if the banks
But
don't
how are they going to
appra-
get financing?
Well, even if they don't
appraise?
appraise,
Oh, okay, if
like-
someone's going to come to the table
well,
with
sure,
more money.
people buy multi
Sure.
like that.
But it's going to be
no
the
different
same
than-
boat we were in
Yeah.
when we started doing the duplexes in 2015.
Yeah.
Yeah,
Yeah, the banks just won't recognize it
Yeah.
at first.
but then I'm just curious what the price points are going to be at, because there's going to be a lift. Is it 100 grand of the 200? Is it 200? Is it 250? Is it 50? Like I don't know.
Control
but I'm
that large of a revenue stream off one property. You're
But it's
right.
going to be
Someone-
interesting because we're spending 200, and right now we base the numbers off of the 2,000 a month. But what percentage of equity built into that are you getting back in
Sure.
in the 200?
Yeah.
That's going to be because then all of a sudden, let's say, and I'll just throw a number. Let's say you get only 100 back out of it, so there's 100 grand lift on price, right? So now you've really spent 100 because 100's baked into that equity there. You've only spent 100 to get the 2 grand a month. Right, because you've outlaid 200, you got 100 back, you're getting 200 grand a month. And then it gets
It's interesting.
then it gets really
One of these
interesting really
properties
quick.
is now generating $60,000, like at $5,000 a month in rent, could be higher overall for the property.
Yep.
One small kind of single lot is generating $60,000 a year now.
Well, we've been waiting to knock down one of our places because we've been waiting just for some things to change. So parking has now changed.
Yep.
We're still not sure about if we would get approved, because we would be able to get a 2 units with we couldn't get the third. We couldn't get the legally approved third. But now with some provincial rules that they're looking at changing and some of the parking rules that have changed, we're very close to getting the third. Then all of a sudden the numbers get really interesting for doing it. So that's why we've kind of just held on.
And
to
I think
that
it's
for the
worth
time
holding to see if we can get the third.
100%. But now's the time to just revisit it and see if we could get the third.
If parking rules have changed and we can build a proper triplex on there.
Yeah, we're getting
the other
close.
rule that changed is Hamilton.
Yeah.
Yeah, is that they had removed, this wasn't just recent, but they had removed the square footage requirement in Hamilton as well. So we used to have a 700 minimum square foot requirement. They've removed that now. So before we would often just look at the bungalows because let's say a 1.5 story, you couldn't really convert the basement because it was too small.
Now on a 1.5 story house, smaller
maybe
basement.
you can have a 1 bedroom unit.
So they've removed the 700 square foot requirement completely or just reduced it to like.
No, it's gone.
So you can have
same
any.
as Welland is the same as well.
So you can have any size legal second suite in a basement.
Yeah.
So it could be tiny.
Yeah.
As long as it's done to code.
As long as it's got height requirements.
Yeah. So it's done to code.
Yeah.
It's still good.
Yeah.
Wow. So between parking and stuff,
there's more
between square footage and parking. Those are pretty much
basically we're going to see this entire Greater Toronto area just in the next. We're not going to even recognize it 10 years from now.
They need the housing.
They need the housing, and I guess
it's why I got so irked. I don't know if you saw when there was one bank economist that came out and wrote a report. One of the big 5 banks, and it was like he was basically kind of like gloating to the other bank economists. He's like, "See, I told you the housing market there is no lack of supply in the housing market. See, I told you, it's all interest rates." And I'm like, it's such a ridiculous comment because like he's basing that off of the last few months of what's happened. But like, there's got to be more of a context. You think if someone's writing one of the main economists for one of the big 5 banks to come out and start saying like that, I'm like, it's to me, I was like, this is like irresponsible. It's so simplistic.
You know what the lessons are here? You never trust bankers and you never trust mainstream banking economists. That's the lesson. I'm joking. I'm sure there's one great banker out there. But as soon as there's one banker out there who's a good person.
But as soon as demand has been removed from the resale market because of interest rates and everyone's kind of waiting to see what's going on with it. What happened to the majority of rental markets? And maybe, and now a lot of people moving back to Toronto. So that one's taken maybe some of the froth that was out in kind of the 905 region and stuff. But we're still seeing people are moving into small, even with these kind of short-term trends, people are overall moving into smaller units and paying higher prices overall. So you're seeing the demand then there. Mm-hmm. And the municipalities are approving these because they know they need the housing.
This area is it's a really interesting opportunity for investors, this area. But just for the area, it's a complete mess with lack of housing and then your dollar just being devalued the way it is. That combination, it's just a disaster. Like it's a disaster. But for investors, it presents a lot of interesting opportunities because we're just short on housing. So Tammy, just to kind of wrap things up here, when you're talking with investors now, where do you like to guide them if they come to you and say, hey, here's my favorite areas or opportunities? Is it still Hamilton, Welland, Brantford? Those are the 3 that you like?
Only I have ventured out to Simcoe and Kitchener, and there are definitely some other areas and so on, but usually for myself, it's just within about an hour. Except Toronto.
Yeah, got it.
From my own home. But those are the areas that I specialize in, I'd say. So, and they're great cities to work in, and especially if we're looking at this future growth, like as far as the conversions and garden suites and so on. Those cities are all open to all of that.
And there's another thing coming Tammy's way in Hamilton is all the big condo developments that we know that are coming out. Yeah. That whole harbor front, that whole project's going to be massive for Hamilton. So you haven't talked a lot about condos, but I wonder when those projects come up, some investors right on the water there, as they redevelop, that's going to be a huge thing. And I think the interesting thing for a lot of investors is that people who grew up in Toronto won't recognize how great of a project that's going to be. But that project built on the water in Hamilton, I think is going to be a win, and a lot of investors are going to miss it.
I grew up in the hood. Yeah. I grew up in the North End in Hamilton. I know.
You're tough. Yeah. Remember that one time?
No wonder you can handle all this.
Hey, remember that one time I drove out of that? We were looking at one property, and I drove down the street, and some kid was chasing us. Do you remember?
Oh yeah.
We were together, right?
Yeah.
We went to see some property. It was in a bit of a rougher area of Hamilton, and there was some guys outside. There's some tow trucks like on the lawn, and some rough guys on the porch. And the thing is, it was
Tom's got some new BMW. I think.
Yeah, it was the first time I had ever gotten a BMW. I had a Honda Civic forever. I got this new BMW, and I'm like, oh my gosh, this is feeling a little bit, and I feel like I can handle myself. So I don't know really it just felt a little bit off. Yeah. Brand new shiny BMW. It was like a 323 that we had. It was like it was like I felt really proud, right? Yep. Like I got this car. And we got in and we start pulling away, and some kid on a bike starts chasing us and yelling at us. And I'm like, holy shit, like what the hell is that? Like are those guys we saw on the porch, are they right behind the kid? Like, are we getting like attacked right now? So I kind of give it a little bit more speed. I get to the end of the street and the little kid pulls right up next to us, starts banging on the window. And we roll down the window and he's like, you're going the wrong way. It's a one-way street. And I was like,
shame on you.
Shame. Just shame. Just put my head down. Oh my gosh, thank you. Just turn the corner and just like meekly get away in my crappy BMW. Give me my Honda Civic back. Anyway, so yeah, we got off topic there, but Tammy, thanks for sharing all this. Thanks for sharing your story. And we always hear, for anyone listening, Tammy's been working with investors, and we always hear through the grapevine all compliments from people who work with you, how committed you are, how patient you are explaining things, how seriously you take this kind of stuff. And I think real estate investing is hard, but to have someone like yourself working alongside of an investor, I think, it's obvious how much work you put into this from the feedback that we hear.
Sweet.
So, yeah, just keep doing what you're doing. It's hard shit, the mortgages and the property and the zoning and what can be built and setting people's expectations, getting them through the volatility that I think is going to continue. It's weird times. So to kind of have like a rock like yourself to kind of lean on through this, it's really valuable. So
it's so great. I love it.
Yeah, and I know you love it. Yeah. So if anyone listening to this wanted to reach out to you, is it an email address you want to hand out, or an Instagram handle, or all of it? You go.
I'll do Instagram because then if anybody wants to check out, I will try and do some posts. I get a little shy. I'm like, oh, should I do I got to do work posts. People know I'm working, but I want to do family posts because people love the kids, right, and so on. So, but it's just my name, Tammy DiTomaso.
Okay, so and we will link to that Instagram handle in the show notes here. So, yeah. Anything else, Nick, Tammy?
No, it's awesome.
Tammy,
thank you so much for having me.
Was it scary? Was it scary?
Nick is a little bit. So
Yeah.
No kidding. No, it was great.
Yeah.
I was very nervous coming out.
Yeah,
to
you
talk
pulled
to
it
you
off.
guys, but you guys are great. Thank you.
Appreciate it, Tammy. Thank you.
The tequila you guys gave me before helped.
Yeah.
Just kidding. You didn't.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Terms show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.